Part 3. Okay, we talked about Part 2 being the part of the form where we tell the IRS everything we can to avoid the penalty. Part 3 is we're going to tell the individual, right, whether or not they have coverage so they can use that for their own individual mandate purposes, their individual tax purposes. So again, you're going to make sure that you are providing information on everyone who is covered in the applicable month that they were covered. So this can take a couple different turns. If it's employee only, you're going to add in the employee information if they were covered during the entire calendar year, which may be the bulk of your plan population. You only have to check the covered all 12 months box again. But let's say you have an employee who is covered all 12 months, and then in June that employee gets married and enters the plan under a special enrollment, right? Then you're going to put down the spouse's name and you're going to check the months that the spouse is covered under the plan as well. Same way if you're in you have a married couple and they have a dependent child or they adopt a child, the months that the individuals are actually on the plan. Now, you have to include the Social Security number of the employee, the spouse, and the dependents, the people who were covered under your plan. And we've been working, if you're a MedBen client, we've been working for several years to try to collect dependent Social Security numbers. There's a specific IRS way that you are supposed to go about asking for those if you don't have them. And so there's some, I sort of have two minds of this. Yesterday I told Mike to put his fingers in his ears so he doesn't go back and tell his attorneys that I said this. It's sort of our philosophy that if people aren't giving them up, there is a special IRS way you're supposed to ask for a Social Security number for anything, not just ACA purposes, for anything. If you needed an employee's Social Security number and they failed to give it to you or refused to give it to you, then you would have to go through a series of requests over a series of years using the special forms that the IRS has presented before you could avail yourself of that issue and use some other identifying number like a birth date or something. So the same rules apply here, but what we have always suggested is you get that information as a question on your employee application. You try to get that information voluntarily with regards to dependent Social Security numbers. If you don't have them, you're allowed to use the date of birth for a dependent on the form. I suspect that goes for a spouse as well. If you don't have a Social Security number, you're going to have to use that. Again, I don't know what the IRS is going to do. It's sort of one of those things that they're going to come back if you put date of birth on your form and say, did you use the proper methods to try to ask for a Social Security number? I think to me, the bigger risk is that I leave that off. I don't have a Social Security number, so I can't put that in, right? So I'm going to have to put date of birth in. I'm going to have to identify this person some way, and I think that's probably the safer route. I don't know what Mike's attorneys say, but I think.
And there's 3 formal tries. You have to note or show that you have had 3 formal tries to get your number before you go to date of birth. So it's going to create more mess and work in your part. Depends. Sometimes you do, sometimes you don't. I don't know that you didn't do that previously, right? You didn't necessarily need.
Yeah, well, we've always asked for employee and spouse because of this Medicare coordination and things like that. So we didn't always ask on dependents, but for the last about 3 or 4 years, we have been trying. We've been recommending to all of our clients that those enrollment forms or change request forms or however you're entering that data for either new or renewing employees that you put that on those forms. Again, there's no. It's not a violation of the law to put that on there and have it voluntarily given. It's if they don't, if they refuse to give a Social Security, even if an employee refuses to give a Social Security, you're supposed to use the same process. Nobody really. I mean, between all the Form I-9 and all the stuff you have to fill out when you're an employee, nobody really does that anymore.
Yeah,
So the biggest struggle I have with I-9 and medical forms is for the I-9, you're not supposed to tell them what you are collecting, right? The employee has the choice to present whatever.
Yeah.
But then for the medical staff, you're like, no, I need a copy of your Social Security card. So it's.
Well, usually what we tell, and I know at least what we tell our clients and what we try to do is we let them know that despite the fact that there is a move on to not, people don't want to give their Social Security numbers up, that both providers and Medicare still use that number. And if they want to get their claims paid We really need to have that number, because we can go completely free of social security numbers, and we have at MedBen. We don't use them, we don't print them, we don't put them on things. But if we don't have it, the electronic claim coming in from your provider will get rejected. So that's how we sort of try to make sure people understand that. That's a little different than what I'm requesting maybe to pay you as my employee, to make sure that I met the I-9 requirements and so forth.
And that's how the IRS is going to use social security numbers and tax ID numbers. That's how they're doing everything behind the scenes to figure out penalties and who gets credit, who doesn't get credit stuff. So.
Yeah, I mean, despite all of this chatter about how, I don't know if anybody remembers, but we avoided a huge bullet a couple years ago. Was it 2 years ago, where they wanted to do the personal identification number? Yeah, there was a thing where they were going to make everybody get a personal identification number. I'm like, we have a personal identification number. It's called our Social Security. Now there are 2 numbers that people could know about me and potentially steal in it, take my identity. Great. So we did avoid that, and I think now the IRS is pretty much embedded in the Social Security number with regards to healthcare reform too.
And obviously, one of your considerations here, specific to Part 3, is, all right, who is my medical vendor, my partner? Is it MedBen? Is it somebody else? How am I going to get this? Where am I going to get it? What format is it going to be in? Because it is, obviously, it's 1/3 of completing this form here. Make sure that we're doing it correctly.
So if you are a MedBen client, you're working with 5 points, we're working with our IT guys to get this part of the data and part of Part 1, and a lot of Part 1. We wouldn't know your contact name, who you wanted, that isn't on the data feed that we have that's in our system. But a lot of Part 1 and Part 3 is going to come electronically into their system so that populates these parts of the form, right? And then they're going to work with you to get the information from you to enter into the system for Part 2, right? So it's Part 3, we don't have information about your employees that didn't take the coverage. We only have information about your employees that did take the coverage. But as much information as we have in our system, we're going to try to get into these forms on your behalf.
Yeah, and if it's not MedBen, one of the challenges I'm seeing from a lot of employers is, depending on if it's TPA or carrier, how easily accessible is Part 3 information, when I'm going to get it. We work with folks that are on the state health plans for several states. The states are way behind. They're saying mid-January is when they're going to send the employers this information. So you definitely want to find out. I'll let you know the IRS said if you're filling this specific form out, 1095-C, manually, so I'm doing this one by one, the IRS says you should expect, and this is the instruction booklet, expect to take about 12 minutes per form. So for every 5 employees, you're looking at an hour. Got to be out by the end of January. Imagine if you get this mid-January from your vendor. It's going to be ugly. So something you want to stay on top of. You want to make sure that when you partner with somebody, make sure that you can get access to this readily, maybe on a monthly basis or whenever you choose.
Are there any requirements on what you have to use to fill this out? Can it be handwritten? Does it have to be a certain font, like SPCs? Or no?
No, it certainly can be handwritten. Absolutely.
So the final forms that came out were PDF fillable, right? So you could do that. You could print them and
So
fill
if you want to
them
do
in.
murders and stuff, you can do that. Yeah. But I know there's folks that do it handwritten. Yeah.
Right. So again, Part 3, this is the part that's completed if the employer is actually offering coverage and the employee is enrolled in the coverage. It has to be completed for any employee who's enrolled in coverage regardless of whether the employee is full-time. So this is truly where you're just going to put down the individuals that are covered under your plan. So they know when they go to fill out their tax return, which months they don't owe a penalty. You check the box that they're covered for the month. If they're covered for the entire year, you can check the all 12 months box. And it's also important to make sure that you're thinking about non-employees who are covered in all of those categories for your particular situation, right? COBRAs, retirees, anybody like that.
So I'm going to fill this out for all my full-time employees. The employee that was full-time for 1 month of the year, so I had a new employee in January, they worked the month of January, then they terminated. I've got to do a 1095-C on them. All my non-employees or part-time employees that are enrolled in the plan, I'm doing a 1095-C. So when we talked about initially, if I have to do 250 or more 1095-Cs, then I have to do it electronically. That's where it comes back to, depending on your turnover, you may be at 200 employees, but I'm going to have to do electronic filing, because I may end up triggering over 250 returns at the end of the day. I have to do this for everybody that's eligible. One of the situations you run across many times is I've got a husband and wife that both work for you. For Part 3 as an example, let's say the husband has the wife and the children on his plan, but the wife works there as well. I've got to do a 1095-C separate for both, because they're both employees. I can't have redundant information in Part 3 though. So what I end up doing is saying, all right, the husband's got the wife and the children under his plan. I'll fill Part 3 out, that says who's covered, husband, wife, and children. When I do the wife's, I'll do Parts 1 and 2. Here's her demographic information, she was offered coverage, and then Part 3 I'll leave blank, because I don't want to have redundant information with Part 3, because I already put her information on the husband. That make sense? There's my...
Okay, so I think we've gone through a lot of this information already. Again, we're going to use the social security number. If we don't have that, we're going to use the date of birth. I think we forgot to talk, or I failed to talk about this yesterday, but this, so they've said that you can use a truncated social security number on this form. Again, remember this is a form that could potentially be put in the mail, just like a W-2. Does anybody truncate on a W-2?
Well, yeah, you're not going to truncate the one that goes to the IRS. The 1095-C goes to the participants. There I can truncate it. I also send a 1095-C out to the IRS. I can't truncate it there. It's going to be the full access.
But I don't know, I mean, so the same rules apply to W-2. Yeah. Great. We talked about that, yeah.
So, you know, obviously the key points here, making sure we understand who we're actually completing these forms for, depending on who we use. Do I have access? This has been a challenge as well. Do I have access to the folks that are on COBRA and or retirees? You know, COBRA's example, you may have somebody else administering COBRA. They terminate from employment, you wash your hands of them. You have no idea if they took it or not. Obviously, if they're on COBRA, I've got to report on them, so I need that Part 3 information, so whoever vendor I'm using, I'll make sure I can get access to that. The limited non-assessment period is going to be big. That LNAP is going to be real big for us going forward in order to avoid some penalties for A and B, and I'll talk some more of that in the next section. And we talked about the spouses, making sure that we get one and not being redundant. Questions on the 1095-C that we didn't hit on, or something that you've run across at this point? If we're good, I want to take a little break here and go to the bathroom, get something to drink, and then we'll start on the 1094-Cs next. Question?
You might have covered this, you might have missed it.
Too fast.
If our company offers health insurance, if someone doesn't take it, do they still get this form?
If they're full-time, yes.
Okay.
Absolutely. Yep. Because then they have to prove, for penalty purposes, that either they had it somewhere else.
Okay.
So maybe they're on their spouse's plan, and that's why I declined it. But I do have to have that proof. One thing that I do want to address here from a challenge, you've got resources, obviously, you're going to have to come up with, even work process stuff. So as an example, I'm filling this form out. I know I'm at risk if I don't offer benefits to a full-time employee. A lot of you may say, okay, I've got all my full-time employees for the year, and I'm going to use 1A. So I charge $60 a month for single coverage. That's less than the 92 for the federal pocket level. I can use that 1A and use it across the board. All my full-time employees, good to go. The risk that you're trying to protect yourself against is that individual, and many of you probably have this already going on. You've got a full-time employee. They're in the marketplace with a premium subsidy right now. So they've gone out there. They didn't understand. They weren't eligible. If you offer coverage that's affordable, meets minimum essential value, then they can't qualify for premium subsidy. But in 2014, there was no process to manage that. It was an honor system. So that individual went in the marketplace, applied for insurance, and they can say whatever they want to, as long as their income levels where it needs to be, they get a premium subsidy. Well, going forward, that doesn't work. In 2015, you're giving the IRS the tax forms that says you offer coverage to that employee in 2015. They might have had insurance the entire year. So they're getting a premium subsidy, let's say it's $1,000 a month for the entire year. When you send your form in, it shows that they weren't eligible. The IRS can do what's called a clawback. You owe us that money back. So they're going to go to your individual employees and say, you've got to pay us that $12,000 back. They're in a world of hurt, obviously. And that's what they're gonna find out now when you file these forms in future years going forward. So, some of the things you wanna think about is basically from an education standpoint. How do we wanna continually educate our employees about this? They look to you as their leaders, so they're looking for that guidance from you all. So that health insurance marketplace notice that we sent out a couple years ago that was mandated in every new employee every 14 days after they're hired. It's something you may want to do on an annual basis because you're making changes to your health plan and the subsidy levels annually. So I may want to send that out to help educate them and continue to educate them because it's going to hurt your employees. They don't know, and it's just, until they actually get hit with this penalty, they're not going to understand it fully. Another consideration from you, and this has caught a lot of folks off guard as well. So I'm going through filling out this form, and I've got all my full-time employees, and I charge them $60 a month, so it's affordable. I use 1A, and all my full-time employees, bam, I hit 1A for everybody. I've got an individual that's in the marketplace right now. It's one of my full-time employees, because my neighbor went in and said, hey, I got insurance for free, and I know I'm about the same income level as a neighbor, so I jumped in there too. I don't want to pay $60 here, I'd rather go get it for free in the marketplace. So they apply for it, they give them this premium subsidy. What happens when we file our forms is the Social Security numbers and the tax ID numbers are going to match up, and the IRS is going to say, oh, we've got John Doe here we're paying a premium subsidy to, and you said you offer benefits and it's affordable, so we're paying out this money, we want to recapture that. So we just go back to you all and say, okay, there's a conflict, we're going to audit you, just show us proof that you offer coverage. Well, the employee came on 3 years ago, they were on their spouse's plan, and they waived off our coverage. They said, I've got coverage through my spouse, I'm going to waive off this plan. And then subsequently, the next enrollment period, we said anybody that doesn't want to make a change doesn't have to do anything. They waived off 3 years ago, they didn't do anything. So this year, when the IRS says, prove that you offer coverage, because you said you offer coverage, what do we have? We got nothing. So from a process standpoint, you may luck out, and there's several employers that we've talked to that have lucked out. We always collect a waiver or enrollment form every year. That is not the rule. Unfortunately, most employers, we're keeping it easy, we don't do anything. So as you go forward, understand how we're going to start doing this going forward. Our system, we do an offer of coverage at open enrollment. You do it electronically. You're being offered affordable minimum essential value coverage for calendar year 2016. Just the actual, as long as they've agreed to accept it electronically, you're good to go. You can also do an e-signature. They sign off, I was got offer coverage, I've got to protect myself going forward, or make sure at least I'm collecting a waiver shows they would offer coverage. So we've put ourselves in a potential bind here from an audit standpoint, specifically for 2015. Now keep in mind, the other thing here too is, and I think there's probably a lot of legitimacy to this, IRS is missing all the deadlines. They're not ready for this, they really aren't. So as we go through this, we'll talk about penalties for filing or not filing. There's some low-hanging fruit. Those are those ones that say, hey, it's going away, I'm just not going to bother. Those are easy ones. I'm going to capture a lot of liability revenue as the IRS from those employers. I may not be able to get into the weeds for you all, but keep in mind when they do an audit, it's a standard, it's a 3 to 5 year look back. When they get their ship in order in 3 years and start doing these audits, they can go back to 2015 and say, okay, now we're looking at the details here. So it's not, we can't just ignore this and, hey, whatever we put in here, we're going to be fine anyways. That may be true this year, but they certainly could catch up at some point. They've got to recapture those dollars that are going out with premium subsidies.